Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. I said 12 weeks ago how the two recent bearish patterns in this market, the two bearish shift pitchforks, that's the smaller August 2023 base one and the larger mid-June to early August 2023 one. This one actually is still highlighted in dark blue on my daily chart. How their very active separation was going to rip each pattern to pieces, and that neither would come away from the action unscathed. Well, it happened in late October last year, with prices exiting both pitchforks and the smaller August-based pitchfork no longer involved with the market. Interestingly, after the breakaways, the market started initially tracking down the outside of the blue broken lower tine, currently at 16,975, a procedure I'd seen before in other markets and other pitchforks. There had been some deviations lower to make a small sideways triangle, for example, but overall prices had tracked sideways to alongside this broken lower tine, even making a weekly key reversal up last week to try and reach up and touch it unsuccessfully. 7 weeks ago I said about this sideways movement of the market, and I quote, "I suspect this seeming sideways movement may not last, as coming in from above we have the declining short medium moving average, that's currently at 16,580, which may well apply pressure on prices and cause an action or a reaction," end of quote. Well, last week the market touched the short medium moving average, and we did have an action, or reaction I suppose. We saw a weekly key reversal up last week, which has so far this week had a reasonably reactionary move back down. If this is what the declining short medium moving average can cause to happen, imagine what the next declining moving average from above, the medium moving average currently at 17,570, imagine what that one could do. The only issue is the market is seemingly creating some support just ahead of the 2021 low at 15,665, and I'm wondering if this will be enough to hold prices higher as the medium moving average starts entering the frame. LME 3-month zinc. The big picture here is much the same as it was last year, though this may not last that much longer. You see, we have two competing shift pitchforks. We have a late May to mid-August 2023 bullish shift pitchfork, which is highlighted in bright red on my daily chart. The market is currently between the middle time below, currently at 25.28, with a whole host of moving averages clustered around and underneath it, between 24.81 to 25.29, and the upper tine above, currently at 26.93, which has nothing much around it at the moment. This segues nicely into the second shift pitchfork, the larger, very large, May to August 2022. That's right, a pattern that is well over a year old. The May to August 2022 bearish shift pitchfork, which is highlighted in purple on my daily chart. On this one, we are right now close to the upper tine, currently at 26.18, and this is the rub. And the upper tine of the large bearish shift pitchfork is now well within the previously mentioned bright red bullish shift pitchfork. Indeed, they cross over on the unusual 29th of February this year, though I anticipate we will have a move sooner than that. I would now like to emphasize once again how this bearish shift pitchfork, which is now well over a year old, I wish to emphasize how it is still working in the overall bigger picture to drive prices lower despite moves higher, especially during 2023. And that includes the monthly key reversal up we saw in December last year. Now, one way or another, the tines are going to be tested here and soon. The question is whether the bright red middle tine will give way and we see the prices move down to the lower tine, currently at 23.63, or will the bigger purple upper tine give way and we have a whole new potential outlook on the market. Now, as I said earlier, we should know by the end of February, probably sooner. LME 3-month tin. There are 3, maybe 4 major patterns here on this daily chart. We have the late July 2023 until the start of October 2023 bearish halfway hesitation. Indeed, well, however, this pattern did not live up to its fullest potential as prices ran into two significant supports that stopped the decline. The first support was, and still is, and also is an obvious one, is a series of congestion bands seen below, specifically between 23,850 to 24,155 and between 22,895 and 23,555. Now, I've spoken about these numerous times before, so they should be familiar. The second pattern utilizes the same unfulfilled bearish halfway hesitation as part of its structure, and that is the June to October 2023 head and shoulders pattern. Now, it's by no means a great looking pattern, with the second shoulder having quite an extension on it. The bearish halfway hesitation, in other words, that's the creation of the bearish halfway hesitation, but it had been good at defining the lower end of the recent market, which is bright red neckline, which is currently at 21,775. Plus, there is an additional consideration to take into account here. It is the September to date downtrend, currently at 24,065, which, well, I say to date, but it's been broken through on the upside, which is highlighted in blue, or dark blue on my daily chart. Now, if we take this into account, then the action since late summertime last year, with the help of this downtrend and the neckline, becomes a bear channel. And that's currently 21,775 to 24,065. The recent action has seen the market emerge back up from the congestion bands below and over all the moving averages, up to highs not seen since early August last October. Actually, early August last year, really. This emergence leads me to the final but only possible pattern here. A mid-October to last week inverted head and shoulders pattern, with an unhighlighted neckline currently at 26,155. You see, I'm actually not happy about this reverse head and shoulders pattern. I see myself trying a little too hard to optimize this pattern to the information that's available. And whilst it looks okay-ish, I'm still not happy about it. Hence the moniker of a possible reverse head and shoulders pattern. That being said, I will lay out some potentials, not targets, not yet, but potentials for such a pattern, if it really becomes a head and shoulders bottom. Okay, so a primary potential would be up in the 28,100 area, with a secondary harder to reach potential up in the 28,895 area. I give you these potentials, but I'm still really not happy about them, but I feel obliged to tell you what I see.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.